Welcome to Breaking Banks. So at this stage, we've got some breaking news. Joining us from over the pond is our good friend Nigel Burton from Railsbank. Nigel's been on the show numerous times in various guises, actually, but it's great to welcome him back. And Nigel, how are things going?
Good, thanks. It's much appreciated to be invited back again.
It's great to have you on.
We've met each other in places like in the middle of the mountains of Maribel on podcasts and various other places.
And in Paris at the FinTech Forum.
Yep.
And yeah, absolutely. Now, you guys have just had a new press release. Railsbank has obviously been doing very well. You've had some good raises recently, and you've had some great press. But one of the things we've talked about on the show, and I wrote about in Bank 4.0, is this concept of embedded finance, and this has now become really central to what you're doing at Railsbank. You were just at Web Summit, so tell us a little bit more about your embedded finance model that you've embedded now in sort of the Railsbank platform.
Sure, we've been doing a lot of thinking, spurred on by people like yourselves and others in the industry about what really is finance, because people don't wake up and say, I want to buy fintech, I want to buy issuer processing, I want to buy a loan. People wake up and say, I want to buy a car.
Yeah.
And buying the car is an experience for somebody, and the experience can be pretty awful, where when it comes to the financing piece, you can wait 2 or 3 hours to go through paperwork and things. But imagine if you're able to buy the car, choose the car, buy the car within literally 40 seconds, including all the financing. So we see that world of that consumers want to have an amazing experience around something and embed the finance into it so it's seamless. And
Right.
Our customers, we provide them the tools to do that. So we've really started thinking away from being sort of the world of fintech, very much into the way of giving tools and capabilities to our customers to create what we call embedded finance experiences, embedded into their existing customer journey, their customer experience, whether it's buying a car, buying television, fixing a car, attending a concert, going to see a sports, your favorite team play, or looking at something like Formula One racing, for example. Those are all things people get excited about. And if they're excited about and putting finance at the point they're excited about, you're bringing finance to them, as opposed to forcing them to go to finance at the bank. So everything becomes much more consumer-centric rather than bank-centric. So we sort of see the shift, and it's a bit strapliney, so apologies about this.
No, that's all right. But it's not. So here's the complexity of this, of course, is that it's not just someone going into an app and asking for a credit facility, because this is the way, this is the way mobile has been adapted to the sort of traditional products. And there has been some, like with buy now, pay later, as an example, we see some contextualization of credit. But you're talking about sort of much more extensive embedded nature of finance. So how are you enlisting the support of the Formula One guys, the sports teams and everything at the point where this is going to be embedded?
The way we express it is if you're able to engage with the fans who aren't in the stadium, because one of the things, biggest issues with the sports is they make a lot of money in the stadium and they make some money as well for merchandising outside. If you continue to engage with your fan on a daily basis, that's a good thing for you, and you get an understanding of deeper, and they can do more offers, and you can bring them in, get more loyalty. And because we've also got the concept, because you're a fan, you're unlikely to default on, say, Manchester United, because that if Manchester United saying you're a bad loan person would be worse than the bank saying that. If you see what I mean, there's an emotive attachment. So it's really and previously in the world of what we call big finance or old finance, is you had to drop out into somebody else's customer experience. And because you go to somebody else's customer experience, all the loyalty, all the amazing journeys you've developed for your consumer or your fan, you suddenly drop out into something that is back in the sort of like 19th, 20th century. And ergo, you lose a lot of credibility with your fan. So it's giving them the tools, letting us take away all the problems of finance, regulation, operations, and everything. And because we're vertically integrated from the consumer directly into the central bank or the payment schemes, we can manage all that risk ourselves. There's no legacy in there. It allows the sports brand to give an amazing experience that they would expect, because they're totally integrated into their own capabilities, to the consumer. And therefore, finance doesn't become frightening. Finance becomes an enabler and a loyalty capability.
So, I mean, this also allows you to be a little bit more flexible with design. So, I mean, in terms of that thinking as a bank, because you now, you're both a marketplace and obviously, a bank platform, but how does that change the way you think about credit access? It's not like a credit card that's embedded in the McLaren or Manchester U website, is it? What is the credit experience specifically that the customer's getting?
Sure, there is the concept of credit, just as a basic credit card, but there's the experience of credit to buy tickets to the next Formula One race, for example. And the way we look at the credit is if you decouple credit from the mechanism it's used, like credit card is just a revolver loan attached to a card. We look at the way that can the brand deploy its own balance sheet along with our balance sheet and a third-party bank balance sheet, because I'm still a massive believer in banks and in that area. And because we have a capital markets business built at the back end of Rails Bank, can we bring all those things together so everybody can profit from the credit and also benefit the consumer? So they're borrowing from somebody they trust. The banks are also, again, say, on the senior side of the credit relationship, and you get a point where everybody wins. So beforehand, the economics of providing finance, even if you're a massive brand to the consumer, you only got about 5 to 10%, if that. Something that's more under 5%. But if you're able to embed it and bring more control of it, which we do give to the brand, your economics, you're getting about 50% of the upsides or more. And so it changes the economics fundamentally. And I think, if I remember rightly, and John Lewis and the other major brands, the amount they took out of the relationship with their financial products was absolutely minimal. It's more like a stickiness product than a real revenue generator. And that's a shift we make happen.
So if I'm a fintech listening to this, if it's a sports team or a merchant that's looking at this, how can they find out more information about this initiative from Rails Bank?
Sure. You can go to our website. You can see our new brand, which was launched last Tuesday, and we're super proud of it. Thank you. It's a lot of work went into it. It's very, very proud of it. And so it's www.railsbank.com, or find us on LinkedIn. You can connect to us there. Or if you want to just contact me directly, Nigel Burton. I'm the only Nigel Burton on LinkedIn as far as I'm aware at the moment.
Fantastic.
And we're delighted to chat.
Great. Well, Nigel, thanks for joining us from Rails Bank. It's always good to hear what you guys are up to and giving us an update, and all the best. I guess we'll hear some more early next year, hopefully, on the progress.
Yeah, thank you, Brett. And always delighted to chat with you.
Thank you.
Well, David Reiling joins us now. He is the CEO of Sunrise Banks and the host of the Next Gen Banker here on Provoke.fm. We've had David on the show before, and David, we certainly can talk about Sunrise Bank, bill yourself as the world's most socially responsible bank.
Yeah.
But we're here at Money 2020, so good to see you here. And we were just talking, you've brought 5 people, so for about a $2 billion bank. I was surprised. I suggested that you probably have more people here for a bank your size than anybody, and you told me that was down. You normally bring 10 people.
Yeah. This conference for us, which it took a few years for me to learn at least, half of the conference is people with badges, and the other half are the people who are in suites and just meeting with people constantly.
Right.
And so while we might be slow learners, we picked up on that, and usually half of our staff are meeting with clients and prospects in a suite just on the hour, every hour for 3 or 4 days. And the other half we're combing for new ideas and new partners and meeting with people.
Well, we're still on the first day, so you haven't seen everything yet. But What are you looking for? Why are you here? And you come every year,
Yep.
right? Or last several years at least, and you bring a team. What's your purpose for being here? What are you looking for?
Yeah. So for me personally, I'm like Sherlock Holmes out there. I'm just looking for the little nuggets and the trends that I see on the floor, in the conversations, talking with customers and prospects. And, this year, after just maybe a half a day or a little bit more, banking as a service certainly coming to the top. Certainly can't miss the crypto, as NYDIG is, a lead sponsor and making a big splash.
Right.
I've seen real-time payments is also companies that I don't recognize the brands, but every time I go up and talk, we're into real-time payments, money movement. That's what we do.
Right.
So it's kind of interesting to see them. And then I would say identity is still in the top list of companies that are here.
Yeah, we still haven't solved that one yet, have we?
No, we haven't.
Yeah, we haven't solved real-time
Data,
payments either.
that's
but,
true.
Yeah.
And there's, I had data privacy and all that as well. But
yeah. Well, Sherlock, thanks for leaving your pipe outside of the media.
Well,
lounge
no
here,
smoking,
but,
yeah.
Well, I will tell you, though, this is the second meeting today already where we are talking about corporate responsibility, believe it or not.
Sure.
I do think that is starting to work its way into the conversation, I think slowly. And so of those areas or other areas you're looking for, that's always a running theme for you in everything that you do. Anything that stuck out to you so far, or you're hoping to learn more about?
I see maybe a little bit more of the signs, kind of the diversity, equity, inclusion.
Right.
Particularly with stage presence, and I think that's intentional with the Money 2020 group, and so that's good to see. I did see a panel or two on crypto being inclusionary, and at least the discussion around that. So I'm kind of interested as to how that gets approached. And I do think that at a lot of the heart of the fintechs that are out there, there really is a sense of, and maybe it is money motivated, but the fact is, how do we reach markets that haven't been reached before? Who's been excluded? How do we crack the nut and make banking, if you will, or financial services or payments, or however you want to think about that, more inclusive to more people and make it accessible, easy, convenient, and fairly priced?
Yeah, I would agree with that. I think I've sensed more, at least talk. I'll reserve my judgment on whether the action's there or not
Good
yet.
point.
But at least talk around inclusion. And not just financial inclusion, but I would say kind of beyond the mainstream of just consumer payments too, right? We were talking to a couple of folks who are working in the small business or the commercial space, and some around the trust and estates space. And I think that's interesting to see.
Yeah.
I said this earlier, I think we're still pretty early in the consumer fintech revolution, but it's been around for a while now. It's maturing. I think we're in the very early stages in some of the other parts around the business. That's something you think about too, and not just how do we reach more diverse set of customers, but different use cases and different markets.
Yeah, definitely. As a matter of fact, there's two things that stick out in my mind there. One is, I had a conversation this morning with a regulator of all things on whether, the financing a transaction at point of sale, is that a good thing? Is that a bad thing? And the fact is that I think there could be both. I think there could be a niche there in which, financing that transaction at the point of sale, 3 monthly installments, that sort of thing, can be a very inclusionary and a very responsibly structured product to match the credit terms with whatever they're purchasing.
Right.
But I think there's also a lot of room for abuse in that particular case in terms of overcharging. So there's a business case that I think is still out for a little bit of judgment, and it'll be interesting to see where regulation ultimately comes down on that.
Well, I think the whole buy now, pay later space in various flavors is super interesting, because I think most of us embedded in this industry thought there wasn't really a need there.
Totally.
Right? You
Yeah.
have a credit card, and you maybe have a personal line or an equity line, and you have cash, and there's lots of ways to pay for this.
Right.
And boy,
Where we run.
the Wisetax and the firms and others of the
Yep.
world that have really said, no, there's a need for people to finance
Definitely.
these things a little bit at a time. I was talking to somebody earlier that said I had to check my calendar when he told me this. He said they're working on a credit card based payment that's tied to a home equity line. I'm like, oh, and my reaction was the same as yours there. That could be good or bad.
Sure, exactly.
Right.
With that easily accessible into your home equity, the compliance around that's got to be interesting.
Yeah. Yeah. So I think the angle, I don't want to say too much. I don't know where the company is or what their stage is, but I think the angle they were trying to carve out a new niche of that, right?
Sure.
People that are making major purchases, but they already have this asset here.
Yeah.
And I thought, boy, I mean, I was in banking during the rise of HELOCs, right?
Sure.
In the late 80s and early 90s. And that I always joke, that was the last time we had a growth category in the banking business.
Right. That's unfortunate, but true. You know, the other thing that I find kind of curious is I thought I would see more consumer brands to really see the embedded payments. Like where are the big corporates that sell stuff? Like, you know, the Procter & Gamble's or the Microsofts or whatever, that the finance piece could be embedded much like an Uber ride, just embedded into the purchase. And whether it's financed or the money moves, but somehow that experience is just that much better when the payment is really taken care of.
Yeah, and maybe 5-6 years ago, there were a lot of those here.
Exactly.
In fact, if anything, it felt like, we'll go back to the good news, bad news, right? If you're a banker here, it maybe felt like, ooh, this is out of my realm, but that's kind of interesting, right?
Yeah.
Because this is where the puck is going. And yeah, I took a quick lap around the massive exhibit floor here today. A lot of great looking stands, but a lot of fairly familiar names.
Correct.
In fintech, right? It feels a little bit more like a more traditional fintech show than it has been in the past?
I would agree. I've seen a few more, I would say, certainly in the Bitcoin space and the banking as a service. There's sprinkle and dot the line. And I don't know if it's just an illusion this year that the conference even seems bigger. Maybe the booths are spread out more or something, but I have never seen this conference get smaller. So it's still a ton of interest.
Yeah, no, the hall's big, and there were like 9 different lunch things. Although you had an interesting lunch today. Can you talk about that?
In what?
Your lunch today.
Oh, in my lunch today, sure.
Yeah.
I was fortunate enough to get invited to a lunch with Chair McWilliams, the FDIC chair. And it was for minority banks as well as community development financial institutions, or CDFIs. And so I give Chair McWilliams really a lot of leadership credit in initiating an equity fund for MDIs and CDFIs to promote investment in those communities that are generally underserved. And so anyways, it was a nice lunch to touch base with her and hear from the lead investors in that, which is Truist and Microsoft. And so we'll see what the results of what that fund looks like at the end of the day and how to take advantage of it.
Besides the fund, what other kind of activity needs to happen in that space to really drive that to where it needs to be in your estimation?
You know, I think clarity from the regulators around fintech, and this also, I think, has a bit of a political flair to it. It seems like between administrations, it's either in favor or maybe out of favor. And as a result of that, we find the leaders at the top, the head of the FDIC or OCC and Fed, will have their own position. And so that little up and down in tone at the top is challenging when you're in it, as to how you're going to be perceived by your primary regulator when they show up and examine the bank. So I think clarity around that ultimately would be really good, consistent across all those regulatory agencies. That would really kind of set the stage, as well as, I think, set the stage for the fintechs who need to comply.
Yeah, I mean, I think any bank CEO would agree with that statement. Is there anything particularly true about that being a CDC?
So, I mean, I think in the people that we serve, which happen to be almost somewhat vulnerable and underserved by nature, we take extra precautions to make sure the consumer protections the disclosures are really apparent and transparent. And so in that particular space, we're very cautious. And we communicate with regulators regularly on that because of the communities that we serve. But again, more and more clarity around what does it mean to make a loan on behalf of a particular fintech in a true lender type of a situation. That clarity becomes really important because you're putting all the legal staff in place in all 50 states to make sure that you're complying. And if there is more clarity around that, it makes it more efficient and effective and clear for everyone.
Yeah. Well, the Media Lounge is the most popular place in the whole conference, I think, today. Suddenly we're swamped. It was relatively quiet earlier today, so I apologize for the background noise. But no, I agree with you. And where's the talk these days around kind of lending guidelines? Because that's another thing that the banks talk about a lot. Look, we want to serve more customers, but the way we're underwritten, or we have to underwrite, and the way we're examined against that underwriting isn't always consistent with the way we want to lead, and provide services for our customers. Where's the conversation with that these days?
Yeah, it's really, in my opinion, an interesting conversation that's taking place right now, particularly with the underlying alternative data and AI that's going into the underwriting. So, opening up the black box and, what's into that actual new credit underwriting for a consumer loan, let's say. So that piece of it, there's an organization, FinReg Lab, who is actually doing studies on how do we not only look at the AI that's in the black box and test it on the front end, but then back test it to say, hey, it actually did what it said it was going to do, and do that then continuously, that this underwriting system, whatever it is, what other alternative data is being used, is actually consistent with fair lending. It is not abusive in terms of UDAP. And so it's in those spaces where regulation is going to evolve, I think, to a more real-time type of activity, as opposed to an examiner coming in once a year or every 18 months, which is forever in the fintech world. This is really going to be somewhat an embedded regulatory system in which you're seeing what the data is daily, weekly, in terms of it and analyzing it. And then from there, you're making some assessment or adjustment. And that doesn't mean you're a fight with the regulators. It means having that discussion and a tweak to see what needs to happen or what anomalies are taking place. And that is just learning that's taking place as to how do we do this and do it right. And quite frankly, get to the markets that really are underserved and doing it in an appropriate manner.
Well, and I think all of this is underscored by something you said a few minutes ago, is that disconnect from the leadership at the top, I think, of all the major regulators. And, your bank's also a member of the Alloy Labs Alliance. I know we have conversations with the regulators, and we hear from a number of your peers that frustration between, hey, we love what we're hearing from the top, but there's a major disconnect to the examiner that's coming in and asking completely different questions, right?
Yeah, and I'd have to say the other kind of nugget from the conference that I've seen so far is reckless, maybe not the word, but the fact is it's everyone is saying we're real time. Our speed to market for a fintech is 10 days. Everything has got to be instant, and the fact is that the regulatory environment is not that fast, and you need to do that right. Right. A mistake in that is a big mistake for your fintech and could take you out of business in a second and could take the bank out of business entirely. And so there does need to be some type of caution. I, more than anyone, would love to see real time in that speed really be there. But the quality, the underwriting, the due diligence also needs to be there and needs to be clear for everybody to follow.
Yeah, no doubt. I mean, it's just continues to be an interesting time of the push-pull. And I always say, by definition, regulation lags innovation, right?
Yep.
Right. The innovators come up with new things, and the regulators have to respond to that. But yeah, when the world is moving fast, it is quite a governor on speed that when the regulators can't or won't move at that speed. Well, what else do you hoping to see here over the next couple of days?
I'm hoping to engage with a few more regulators along the way. I know that sounds a little strange, but getting their insights as to what they have a take on is usually a good indicator or barometer as to what we might see next. I would say that I got to continue to learn more and more and more about Bitcoin. I like what I see, quite frankly, and there's avenues in which to get in it. I still think there's a bit of a comfort level that I still have to get in that range.
Yep.
The only other thing that I think I would like to see, there's two things on my mind. One thing that I'd like to see, and I don't see anything really around sustainability and fintech's ability within all the data that it has to really begin to dive into the question of environmental sustainability, of which I think fintech is very ripe to do so. you can really use real-time data and understand what the carbon count could be and what that footprint is. And so I think there's a lot to be done in that. I think there's leadership that's kind of lacking in that space.
Well, I just spoke to Arnaud Auger of BNP Paribas, and that was something he brought up. So we put these interviews together. Maybe we'll do him after yours. That'll be the answer to your question.
I'd like to hear it, yeah.
And speaking of podcasts, we were just thrilled with Next Gen Bankers, a part of the Provoke.fm media family. How are things going on the podcast, and what do we have to look forward to? What's coming up on the show?
You know, the podcast is going really well, better than I thought. And I love it more than I thought it would in terms of engaging with...
I think you hate to talk so much, David.
Yeah, well, I'm a shy wallflower. But in that space, what's coming up are really some new and exciting guests. Kind of, I would say, breaking the mold, going global, going really into other industries and reflection back on what financial services really needs to do to be a positive environmental and social advocate for change. And so in that space, we're going to have some good, hard-hitting questions and really understanding what does the next-gen banker really look like? What skill sets, what empathy, what strategic mindset do they need to come with in which to change the world?
Well, we talked about disconnecting the regulators, and you know, we have that inside the industry, right? I think we have a lot of leaders who really get the vision of, you know, not only where technology is taking, but where society is going and where social change is going, and that doesn't always trickle down all the way. So I applaud you for kind of taking that on and taking a leadership role and helping to define and create what that next-gen banker looks like.
Definitely, and we see it coming at us fast. We see the next generation, as the baby boomers age out on the older side, this next generation is environmental sustainability and social responsibility is not an option. It is, we're going to demand this. And we're starting to see that in a younger class of regulators as well, that there is an appreciation for that. Maybe even in the Community Reinvestment Act remake 2.0 that we might see something in regards to climate in there as well.
Yeah. Well, David, anything else we should talk about before you get back to the show?
So, JP, there's only one thing else on my mind, and this is very trivial.
Blackjack?
No, well, that did float through. In the past at Money 2020, you would have countries like Israel and Canada here that are kind of on the cutting edge of technology and so forth. And the only presence of, I guess, of a state is Ohio.
Yeah.
So I don't know what happened between previous years and now. But
well, this used to be the only Money 2020 show.
Oh, that's a good
now
point.
They're doing shows internationally as well.
Right.
So maybe there's less of a need to come here. But you're right. And I saw that booth. They're still pushing Jobs Ohio, which is great.
Exactly.
My home state. So,
there you go. They're going
good.
for it. There's an opening.
David, always a pleasure to see you. Thanks for joining us.
Yeah, JP, great to be with you.
Thanks.
Hey guys, I'm super excited to be joined here by Matt Wallaert, the head of behavioral science at Frog, which is an amazing design company that's done some work for cool banks like USAA and many others. Matt is here with me at Money 2020. He's speaking here, and we're excited to dig into some of his work as an applied behavioral scientist. How are you doing today, Matt?
Good. So far, so good.
So far, so good.
So
awesome.
far, so good.
So you're very specific about doing applied behavioral psychology. What does that mean?
Yeah. So applied behavioral science versus academic behavioral science is an important distinction in the world, right? Because it not only changes what we do, but it also changes. I was actually talking to my team about this today because they kept anchoring on academic behavioral science. They were like, well, but that's not perfectly scientific, or it has these biases and things. And I was like, yes, but you have to remember, we're not looking at academic behavioral science as our anchor and moving back from there. We're looking at how people do product development without us and going up from there, right? So if you think about the typical product development process, maybe some research happens, maybe, right? If we're lucky. And then we get in a room and we do this wonderful thing called design thinking, and people, ideate and put things on a board, and there are stickies and card sorts and all sorts of things. And then inevitably sort of like whatever the oldest, most powerful white guy in the room said becomes the decision. Like, that is not science. That is the opposite of science. So I'm not worried about being perfectly scientific. I'm worried about being more scientific than that. And so that's what I mean by applied behavioral science. In academic behavioral science, what we are trying to do is figure out truths about humans. The outcome is knowledge. It is Gnostic in nature, right? The output of applied behavioral science is change, right? the science part takes a back seat to the behavior part. If I could snap my fingers and get people to do the thing I want to do, I would do that, right? If it was magical, I would do it. It's just magic isn't real. Science is real. It just turns out that science is a better process for getting people to do something in a rigorous way than snapping your fingers. And so, as an example, we don't use, like in academic psychology, for example, we use p less than 0.05, right? For those of you who are not statistically inclined, p less than 0.05 means there is a 19 in 20 chance that what we observe is true, and a 1 in 20 chance that what we observe is not true, right? Meaning p less than 0.05, that's that 5% chance that whatever we're observing is not a real difference. I don't care if things are p less than 0.05, right? I care that things work in the world. Academic science has no notion of cost or benefit, as an example. We absolutely do in applied behavioral science, right? The example I sometimes give for quantitative researchers as I hire them onto my team is, imagine I had an intervention and it was p.2, right? Once again, everybody, that means that there is a 1 in 5 chance that it does not work, right? That whatever I'm observing, whatever I say it does, it doesn't actually do. Well, most statisticians would tell you that's junk. Academic scientists would tell you that's definitely junk, right? It's not anything. In applied behavioral science, I would say, well, what's the intervention? So I often tell statisticians who tell me, well, that's nothing. Okay, but let me tell you about it. It's a pill that melts on your tongue, tastes of, rainbows and unicorn farts, right? Like, regrows your hair, has no known side effects, tastes magical, and cures all known forms of cancer. And there's a 4 in 5 chance that it does all the things I just said. Think maybe we should keep going?
Yeah.
Not launch it to the world, right? We want, as we do behavioral science, we want our confidence to match our scale, right? So as we increasingly want to do something at a bigger scale, we want to be increasingly confident that it's true. But it's okay to be very not confident at early stages, right? When we're running those pilots and things. Yeah. It's okay to keep going with our magical pill that cures all known forms of cancer if there's a 4 in 5 chance it does that. We want to be 99.99999% sure when we release it to the market, but we're not about releasing it to the market. We're just trying to decide whether we should keep going.
It's a really interesting corollary to what banks experience because they have such very razor-thin margins for error in what they do. They really can't afford to mess up. And so it's very hard for some bankers to take an iterative kind of experimental approach, especially to innovation. Can you talk about how you help folks kind of get over that hurdle and think in this way?
For sure. And what I would say is, you said banks can't afford to mess up. What I would say is banks can't afford not to mess up, right? Like, you can't possibly do science. If you are only doing science in which you are successful with every trial, you are doing something very wrong, right? Like, there has to be this willingness to fail. There has to be this willingness to be uncertain and to go forward in a case of uncertainty. Now, you can build certainty. So when we talk about behavioral science, generally we run through, at Frog, a 4-part sort of process. The first is what we think of as behavioral strategy. And it sounds the easiest, but is actually the hardest, which is figuring out what behavior we want as a result of the work that we're going to do. I wrote a book called Start at the End for a reason, right? We want to start with where do we want to end up. I often say, for example, that everyone is a science fiction writer, right? If you were satisfied, Amber, with the status quo, you wouldn't do anything because everything would remain exactly the way it is today. You wouldn't need to do anything because, you wouldn't need to change anything because everything is fine, right? No, we are interested in a world that is different, that is anti the status quo. So we have to imagine a world that doesn't yet exist, science fiction, right? A fictional universe where things are better than they are today.
Yeah. And
that's what behavioral strategy is really about. We use a very formal articulation with our clients, which is when population has limitations and motivation, they will behavior as measured by data. So that's a very formal, and we go through each of those variables. Okay, when we talk about population, who is this for? Like, how do we drill down onto that? We talk about limitations, like what must be true for somebody to have this behavior in your world, right? And we have to set some things outside. Maybe I'm not in charge of getting people to download the app. Okay, so that they have the app is a limitation. Anybody that doesn't have the app, they're outside of my consideration set. Motivation. How would the person articulate what they're trying to do? Not how would we articulate what they're trying to do, but if they described to their friend, well, if I said, why'd you do that? They'd say, blank, right? So if I said, why'd you take that Uber? You'd say, because I was trying to get somewhere. That's the motivation. It's that articulation that a user has of why something's important to them, why they take an action. Then there's the behavior, right? What is it we actually physically, literally want people to do? And then some way of measuring that, right? What is the more formal articulation of that? Is it, if we go back to Uber wants people to, get in a car and pay for that ride. Is that rides per minute, rides per month? Is it about dollars more than rides, right? And we get lazy all the time, right? In order to do science well, we need to be precise about the outcome that we want. We need to describe this virtual world in a fulsome way that actually allows us to do stuff in the world. And so, does it matter if it's $101 rides or one $100 ride, or are those the same? Let's figure that out. So that's that first step. Once we know where we want to go, we have to do a research phase. And this is the observational research phase. This is a place where we're observing the world as it exists today. And in reality, we need to kind of try and figure out two things. One, why the hell would anyone want to live in this world? This imaginary world that we've envisioned where everybody uses your card or banks at your bank or, does, automatic deposit of their paycheck or whatever it is that you envision in the world. Well, why is that interesting to people? Like, why do they want that? And then conversely, given that it's interesting to people, why aren't we there? Like, if, auto-depositing your paycheck as a behavior is intrinsically interesting to people and we know why it's good for people in the world and they're motivated to do it, well, why is it not just happening for everybody?
Right.
Those are the promoting pressures and inhibiting pressures, right? Reasons to do something, reasons not to do something, which compete. When the promoting pressures are stronger, right, we do the behavior. When inhibiting pressures are stronger, we don't do the behavior. And so if you think about what we're actually trying to do, what we're really trying to do is rebalance those pressures, right? We're trying to introduce new promoting pressures, right? Strengthen those promoting pressures and remove inhibiting pressures to make it so that the promoting pressures can win and the behavior wins out. Once we've done that research, then we need to go do a design phase. This is a little different than you sometimes typically think of design. We talked earlier about the foibles of design thinking where, the richest, whitest guy in the room comes up with an idea and that's what we kind of go with. This is design that is expressly connected to the insights that we just had in the previous phase. Where when we talked about the promoting and inhibiting pressures, Amber suggests, well, I think, in order to get people to auto-deposit their paychecks, we should give them a reward. Why? Well, okay, in our research, we heard about the importance of rewards and as a promoting pressure. I'm suggesting it because it comes directly from the pressures. If you suggest something to me and you can't tell me how it increases promoting pressure or decreases inhibiting pressure, we're not going to do that, right? Like, that doesn't go on the board. It only goes on the board if you can tell me how it's connected to what we know from before and how it arrives at the imaginary world we want to go to. So now we've articulated the world we want. We've understood the world that we have. We've talked about what might bridge the two. Then we need to test that, right? We have to build some sort of pilot. That's the other half of science. There's observational science, but then there's experimental science. We have to run experiments that they're validations of the direction we're going. They're not, to be clear, feasibility validations. It's not like, could we do this, or are we doing it in the right way?
That's where so many people get stuck, too. When you're looking at feasibility, viability, desirability, we over-index on the feasibility part and oftentimes completely ignore the desirability. 100%.
We were actually talking about this on my team today. I force people on my team to, every time they try and go there, I'm like, no, remember, you're magic. You can snap your fingers and this will be true, right? Don't worry about how we're going to make it true yet. Just snap your fingers and it's true, right? It's only at the very end, once we've even proved that this is the right direction to be going, because why would you care about feasibility, like, at the beginning, right? Feasibility is totally irrelevant if this is like,
something no one wants.
Yeah, there are many infeasible things that are also not desirable. Let's figure out whether it like actually results in, I don't love the desirability, feasibility. I don't love desirability as a way of talking about it because it implies that it's only about promoting pressures and there's inhibiting pressures in there too.
Got it. Okay.
Right? But we should understand whether something actually gets people closer to the imaginary future that I want before we figure out like, well, how do I actually make that bridge? So let me give you an example, actually, of what that means in piloting for us. So when I was at Clover Health, for example, one of the things that I was the chief behavioral officer, before I came to Frog, I was the chief behavioral officer at Clover Health, went public last year. One of the things that's really valuable to an MA plan is new members, right? New members are worth a lot of money, right? Like, you got to grow. And one of the behaviors that we wanted was for existing members to onboard new members, bring them into the plan. And so we went out in the world. We want a world where if we're articulating the world that we want members to talk to their friends about Clover.
Okay.
Right? That's what we want. We want people to onboard people into Clover. Okay, well, why would anyone want to do that? Why don't they do it? We always look at 5 key groups. Always, never, sometimes, started, stopped. So everybody in the world fits into one of those groups. They either always recommend Clover, never recommend Clover, sometimes recommend Clover, didn't used to recommend Clover but recently started, or used to recommend Clover but recently stopped. And so as we go do research, and by research I mean quantitative and qualitative, right? We're not just looking at data, we're also going out and looking at those people, and vice versa. We're not just doing user research, we're also making sure that we get quantitative cross-validation so that we can believe in those things, right? We want a table with legs that are spread apart, right? If you just rely on quant or you just rely on qual, that's a very tippy table, right? Like, put all your legs on one side, it doesn't matter how many legs you have, it'll still fall over. And so once we understand, the always, never, sometimes, started, stopped, well, we figured out one of the problems for the people one of the differences between the always and the never is how organically Clover played into their life. So if you had a lot of interactions with Clover, it was an organic part of your life that would come up in conversation. So let's pretend Amber and I are best friends. We're best friends.
Clearly.
If Clover comes up, we're going to be best friends after this interview, right? Clover comes up naturally in my conversation if I'm engaging with them a lot. But otherwise, it's kind of a weird thing to talk about. Unless Amber says, well, what's your health insurance? I need health insurance. What's your health insurance company? I'm never all right, Amber, let's talk about health insurance,
As we do every Tuesday over
Every
coffee.
Tuesday over coffee. But what do we talk about on Tuesday over coffee? What are you going to do this weekend? Mm-hmm. That's a very natural conversation, right? So as we understand, hey, it needs to fit naturally in a conversation, we need to come up with interventions. Okay, I need to find a way to increase the natural frequency at which it comes up in conversation. So a pilot, right, new members are worth a lot of money. Clover's a public company. It's got money. So when it does something, it's going to do it big and it's going to do it real. But in the pilot, we're just doing validating the direction. Mm-hmm. So what we figured out was, well, hey, if I know that Amber and I are going to talk about what are you going to do with this, what are you going to do this weekend? I need to get into that conversation. Clover needs to feature into your weekend plans. So how do I get Clover to feature into your weekend plans? Well, we run a pilot. We send 100 users some tickets, right? We say, hey, you know what? We've rented a bar. We got a local band. We've got food. We got booze. Here's your ticket. One for you and one for a friend, right?
Got it.
That's not how Clover's actually going to do it at scale. At scale, they're going to rent out a stadium and get a really big, well-known person, get Smokey Robinson to do a concert, right? Something really relevant to that generation that would be a really premium ticket that they would be really excited about. But I don't need to book Smokey Robinson to do a pilot. I can get a local bar and a local band, right? Send out some tickets. And it turns out, hey, you know what? When you send out tickets to bars, people come. And they bring their friends. Because when we sat down for our Tuesday coffee that apparently Amber and I always have, Amber's like, what are you doing this weekend? Oh, I'm going to this event. Like, whoa, where'd you get these tickets? Oh, my insurance company sent them to me. Well, now we're talking about Clover.
That's a really great example because people don't like to talk about banking. It's not one of those hot topics that you're just dying to talk about. And it's also an area where these are really sensitive discussions too. Mm-hmm. So driving people to talk about their bank is pretty difficult, similar to healthcare, I would imagine.
Well, and a lot of times banks don't bring me a lot of joy, right? They are the removal of some inhibiting pressure to something that I want to do, like an Uber or something. They reduce the complexity to some other alternative goal. But there is an opportunity for them to create real value in ways, by the way, that are enhancing to them. So it boggles my mind, for example, any consumer bank in America, let's just pretend that 50% of their members are women, right? And let's just in general say that they employ, that their members are generally employed. So 50% of people are employed women. Well, guess what? Women are underpaid in the United States. 20 cents on the dollar for white women, 30 to 40 cents on the dollar for black women, like 50 cents on the dollar for Hispanic women, right? What that implies is, hey, if I can get Amber paid fairly, I would get 10% more overall revenue, right? 10% of the dollars that throw through my bank are attributable to the fact that Amber is not paid fairly. That's crazy. Why aren't banks helping people get raises, right? That's something I tell my friend. If my bank came around and was like, hey, Amber, you know what? We're going to help you get a raise. We're going to help you write the letter. And it doesn't have to be that hard, right? I think often banks talk themselves out of doing things because they seem too hard or too difficult, or they think I don't have permission to play there. I absolutely think you have permission to play there, but you have to do it in the right way. And that's what that's why you do behavioral science. It's finding that place. Once you figure out, hey, I'm going to get Amber to ask for a raise. Well, who always asks for a raise? Who never asks for a raise? Who sometimes asks for a raise? Who started asking for a raise? Who stopped asking for a raise? What can I learn from them? What can I build? I'm passionate about this one because, we built a small side project that has helped women earn $4 billion in raises just by generating a letter that helps them ask for a raise in a really, sort of logical, data-driven way. It's very successful. It's very easy to do. It takes about 5 minutes. We coded it in like a weekend. These things don't have to be hard. I think banks always think too big first. They start at these, multi-million dollar, multi-billion dollar initiatives that are going to take years, et cetera. I'm often mad at user researchers because I think, so often I talk to banks and they're like, well, our user research team, is coming back with a report on this in 6 months. 6 months? What are you doing for 6 months? Right? The average engagement, right? Those 4 phases I talked about, at Frog, we're doing that in 14 weeks. That's like a 3-month thing. From the moment you tell us what behavior you want to change to having run pilots that validate that those behaviors are changeable, it's 3 months. What are you doing for half a year? I just don't understand the timeline on which people are expressing things. And I think that has to go back to that certainty piece. If what you want is 100% confidence, you're right, that takes a lot of time and a lot of careful planning. But we don't actually need that in business. We just need to be right enough.
Yeah. Speaking of women, they are better at innovating. We've seen it time and time again in the research that firms that hire women earn more revenue from specifically innovation and new products and things like that. And so, yeah, let's get more women in the C-suite. Let's do it all faster. Let's start testing things. Money is interesting, too, because it has so much to do with our identity. Mm-hmm. And I know that that's something that you talk about a lot in behavioral science, that most things exist to help us stand out or fit in. Can you talk a little bit about that?
Yeah, for sure. So I frequently say that identity, both as a promoting pressure and an inhibiting pressure, is the most powerful pressure I know, right? If you look at, we have tons of research that says once you sort of satisfy your basic needs, and often even when you don't, right, as we've seen time and time again in America, you can be starving and still make identity-related purchases, right? You can not have a place to stay and still make identity-related purchases because identity is that core and that important to us. So it's one of the most powerful pressures I know. And as you pointed out, there is a competition there. All of us want to be special snowflakes, right? We want to be unique people. But we also need to fit in. We need to have a tribe. We need to feel like we belong, right? And so we have this sort of snowflake in a blizzard problem, right, where we constantly need to help people feel, individually cared for, unique, special, and also help them find a tribe, help them feel like they're part of a group, help them feel like they're part of a larger whole. And I think resolving that is really, really important. And again, it is often counterintuitive, and it depends on parts of our identity that may not be readily accessible. One of my favorite examples is there was a great study out of Stanford done by Hazel Marcus and some others about sort of car purchasing. So Amber, if I gave you unlimited budget, you can purchase any car you want, right? But it only can be spent on a car. You can only buy a car. What would you buy?
Tesla.
Tesla. What color?
Orange.
Orange. Okay, we have a bright orange Tesla. You can't all see it, but Amber's wearing bright orange pants, so this surprises me not at all. Right? So Amber saves and saves and saves and saves and saves, buys her bright orange Tesla, drives it home, parks it in the driveway, not in the garage. Obviously, we want to show this thing off, right? Parks it in front of her house, goes in. She has like the best night of her life. She's like partying with her friends. She feels good. She got her Tesla dream car, blah, 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 blah. She goes to sleep. She wakes up in the morning, still jazzed, still the best day, puts on her robe, gets her coffee, goes downstairs, gets her paper, still jazzed about her orange Tesla, gazes lovingly at her orange Tesla as the sun comes up and turns it into molten fire.
Painting quite a picture.
Yeah, I know, exactly. But here's the thing we didn't know about Amber. She lives next door to her best friend, Matt, because we're best friends, remember?
Yes.
Right? So, lives next door to her best friend, Matt. And so as she looks over her now molten flame orange Tesla, what is parked in Matt's driveway but an orange Tesla? How do you feel? Well, most people that are listening to this podcast will probably say, you mother. Right? They're so angry. You might bleep that part out later.
Stole my thunder, yeah.
You might, exactly. You stole my thunder. You stole my uniqueness. I'm so angry. But it turns out that's actually predictably different based on your socioeconomic status. So if your socioeconomic status is, for those that don't know, socioeconomic status is sort of a gestalt of, how much money you have and education and social standing and race and gender and all sorts of other things mixed up into sort of one generalized thing. Lower SES people say, well, that's awesome. We'll start a cart club. We'll get our other friends to buy orange Teslas. We'll drive around on Friday night and we'll be like the orange Tesla crew, right? We'll get this done. So below SES people are overjoyed. They're saying, that's awesome, Matt got an orange Tesla. Now Amber and Matt can convince their friend Rob to also get an orange Tesla. And we'll drive around on Friday nights. We'll be like the orange Tesla car club. We'll cruise around, right? Why? Well, because if you're high SES, you already fit in. Everyone wants to be you, right? The dominant problem of your life is being unique, feeling special, right? That's why at the beginning of COVID, what did rich people sit around and do? Buy diamonds. They bought jewels. There are great stories about how at the early part of COVID, rich people were making sort of bizarre, crazy, luxurious purchases because they had nothing to do but try and celebrate their individual identity. And all of the ways that they had been celebrating their individual identity were taken away from them. So they just made all these crazy purchases, right? If you're at the bottom of the socioeconomic pyramid, you already feel like you stand out. You already feel special and unique. The hard part of your life is fitting in, right? Feeling like you found a group, feeling like you found a tribe, feeling like you have an opportunity to be around people that are like you and that you can feel accepted by. And so your responses to those things matter a lot. This is the kind of reason that we have to do that kind of depth of research. We have to understand, what population am I trying to get to do this behavior? How are these pressures different for that population than for another population, right? What behavioral science does is give us behavior as an outcome, right? Always bringing us back to that, hey, it's not attitudinal. I don't want to talk about CSAT, right? I don't want to talk about NPS. I don't want to talk about attitudinal measures. I want to talk about what physically, literally, what are you trying to get somebody to do in the world and who is it, right? And then that's science-based process. There's a rigorous way to go about doing that. We don't just have to go do, sort of insights reports where I bring back a PowerPoint and then we can figure out how to bridge from that into something that we actually build. No, there's a coordinated, cohesive process. And honestly, it's interesting. We spend more time at Frog teaching this process than we do building things. I'm working with a pharmaceutical client at the moment, and we did a behavioral science project together that scoped at something like 12 or 14 weeks. 6 weeks in, they said, we want to hire 2 of our own. Can you help us hire 2 of our own? Help us write a JD. 12 weeks in, they're showing us off to every other group inside of this organization. They're hey, let's let everybody do this. And that's what we want, right? Frog has always wanted to be at the tip of the spear. It's wanted to push the boundaries of what design could be and do, what behavior change could be and do. So I think it's the hallmark of a good company not to want to keep that back, but to want to spread it. I want everybody to be doing behavioral science so that I can continually focus on doing, the next harder version of that. I can come up with a better behavioral statement or the better process refinement. I want to be at the bleeding edge. We want everybody to be doing this process. Too often innovation groups, they want to build a moat around themselves to make sure that they exist in the future. They want to say, we're going to stake out this territory. No, give it away. You should be giving it away. You should hope that the janitor is doing innovation, right? Yeah. I want the janitor to be doing behavioral science. I want the janitor to be going, hey, I want people to not throw shit on the ground. Let's run some experiments. Why do people throw things on the ground? Could I move a trash can over here? I want that at every level of the organization because that's what really propels change, right? You talked earlier about how, and we do have abundant evidence that female leaders are often much better than male identifying leaders at sort of innovation. One of the reasons for that is their desire to democratize things. They don't want to hold things back. They don't want to be the special snowflake. They want everybody to do that thing because they're confident in their ability to continue to push, right? To continue to do that next piece, right? It's a sign of confidence in yourself that you want to spread knowledge because it frees you up to do ever-increasing awesome work. And that's something we all should aspire to.
You're here at the conference talking a little bit about payments, and I want to go back to Uber. We were talking about Uber earlier. I know that you studied them a lot and have done a lot of research about them for your book. Something interesting was when Uber launched, I don't think most people were using electronic payment methods. So they had a huge hurdle to get people to adopt this new payment method, which is something that we're still struggling with today with real-time payments coming down the pike and everything else. Can you talk a little bit about how banks might start to make those shifts based on what you learned? Sure,
and I think it's important to caveat, Uber is a useful example, but this is not an endorsement of Uber. Travis huge amounts of sexism happened in the early, middle, and late stages of that company. I hope Travis loses all of his money, right? Like, if you are responsible for the sexism that happens on your watch, particularly as a white male leader. And so, despite the fact that I talk about Uber as a good example, it's not an endorsement of them as a company by any shape of the imagination. You're absolutely right. In the early days, something like 12% of adult Americans didn't have an electronic form of payment. So if you sort of think about the limitation, right, going back to the behavioral statement, right, there are limitations. One of the limitations was you must have an electronic form of payment. That is such a big hurdle that in some other countries, that's not true. In order to get into some markets, Uber and Uber-like companies have had to accept cash. I gave a talk in Ukraine, and I got in the car. They, drove me to whatever venue where I was supposed to speak, and he says, "You pay me now." I'm like, "I don't understand. What do you mean?" And it turns out that electronic penetration was not high enough that the majority of transactions, even in Ubers, were being conducted in cash.
Really?
And India is another market where you can sort of pay for ride sharing with cash. We have to remove those limitations sensitive to the market, right? And there is a little bit of a science to that. You have to make a stand at times to say, well, no, in the U.S., I'm gonna stick with electronic forms of payment, right? I really, whereas in another market, I don't have the penetration for that. I need to be willing to relax that limitation, right? Your ability to hold firm on your limitations depends a little bit on your market position in that particular market. When we go back to sort of, when you think about who doesn't have electronic payments in the United States, I think there's often a predictable bias that emerges. And it's interesting, this is a predictable bias that emerges across lots of categories. So I've shown in my lab that if I say, Amber, get people to use electronic forms of payment more, you will automatically gravitate towards promoting pressure. Well, they must be insufficiently motivated. I need to convince them that it's worth doing, right? And that holds to be true across every time. And if I say get people to eat more M&Ms, you'll gravitate towards promotions about eating M&M. Well, the whole reason that we draw out a promoting pressure and an inhibiting pressure arrow is to remind us to focus on the other side. Why aren't you eating M&Ms right now? Because they're not here. Right? Because it wouldn't be appropriate in this interview. It's not because of a lack of promoting pressure. They're still delicious and colorful and wonderful in all the normal ways that they were. It's just there are strong inhibiting pressures. I think we make this assumption all the time that, well, people who don't have electronic forms of payment are insufficiently motivated by electronic payment. Maybe, but probably not. Probably there are very real barriers to doing that. Right? I think there is a huge and massive opportunity in the United States around undocumented people who are here, right? That banks totally ignore. We have, Freddie Mac and others have released all sorts of kinds of mortgage products that are supportive of the fact that we have many different kinds of people in America who are Americans. Banks have done virtually nothing, right, to reach out to those populations and make sure that they have an opportunity to become banks. They instead rely on what I consider to be the very lazy excuse, which is, those people are just insufficiently motivated. Really? Are you laboring under the assumption that, those people none of them magically want to own homes? None of them. None of them have an important goal. That's crazy. What an insane thing to assume. And that's what I love about science, is it challenges our assumptions. When you draw an up arrow and a down arrow and you start populating them and you realize everything you know is on the bottom side and you don't know anything about the inhibiting pressures, that's a signal and a sign that causes you to reevaluate. The reason we use a rigorous scientific process is because it forces us to reevaluate our assumptions, to challenge those assumptions at every turn. And that's what we want. We want a world where we are unwilling to say, it's just because people are insufficiently motivated. And instead interrogate, hey, maybe it's just hard to do.
So this all sounds like a lot of work, Matt. You're asking people to do a lot of thinking. So particularly for financial services, where this is not, necessarily innate, this design thinking, human-centered design mode, why is it so important for financial services leaders to use behavioral science? Because,
it goes back to that assumption that we just talked about, right? You're right. It is a lot of thinking. When I gathered my team at Clover, when I went from being, sort of the sort of subject matter expert on behavioral science to building the behavioral science team, they gave me lots of budget and things, and yet I hired a bunch of internal people, and everyone was very surprised, right? I got people from customer service and other places. And so I encourage a very transparent culture on my team. So we had our first team meeting, and one of the young women who was coming from customer service said, okay, I have a question, which is why us? right? I look around this table, it's like dominantly like women of color, like we're from all different parts of the organization. None of us are what we would think of as behavioral scientists. Why us? And I handed around this survey that I love called the Need for Cognition. It's a lovely, validated scientific measure. And it basically asks you questions about how much you like thinking. And one of the reasons I love it is there's a lot of measures where it's like, you know, when people do these things that are not scientifically validated, like, you know, sort of, you know, I'm a blue, you know, I'm a purple kiwi, right? Like, you know, those sorts of things that aren't really based on anything. There's kind of a right way to answer. I know I want to be a purple kiwi, and so I'm sort of filling it out to be a purple kiwi. The great thing about Need for Cognition is it has questions that genuinely not everyone would say yes to. An example item is like, I want everything in my life to be a puzzle. Well, not everybody feels that way, and it's totally reasonable to not feel that way, right? But they all filled it out, and they were like, okay, we get it now, because they all had off-the-charts need for cognition, right? Inside of your organization in financial services are a bunch of people with really high need for cognition that you are not letting them exercise. You've beat that out of them, right? It's sort of like education, right? Kids in kindergarten are so curious. And then as we move them through the educational pathway and we addict them to grades and we put in limitations and we tell them to perform in a particular way, they lose some of that curiosity over time because we beat it out of them. Same thing happens in FinServ, I think. I see lots of young people in FinServ who are so engaged and so passionate and so interested and so curious. And then just the grind of, you can't do that, and we've tried that before, and no, and here's all the reasons. Like, it just grinds it out of people. And so I think behavioral science in many ways is a calling towards yes. It's an opportunity to, rather than just saying, based on no evidence, that something can't work, saying all behaviors can be changed. Give it enough time and enough money, I can change any behavior, right? Now, some are harder, some may take a lot of time and a lot of energy, but they're all changeable. Putting everything on the table like that and then saying, okay, great, we have a systematic way of interrogating those is key. It's actually how I ended up, funnily enough, in behavioral science. So I was a freshman in college, and I took this intro psych class, which was very bad. And it was taught by a guy who's a fantastic researcher, not a great teacher. But I lucked into taking another psych class, which was taught by a fantastic guy. And I'm just going to pause. Okay, I think we're safe again. So it's my freshman year. I'd taken this really bad intro psych class. Great guy, bad teacher. Right? Great researcher, bad teacher. But I took a second psych class with a fantastic teacher. And we read a paper. And it wasn't that I disagreed with the data, but I felt like they were overreaching the support of the data in support of the conclusion. The conclusion didn't feel backed up by data to me. And the professor, whose guy I should shout out, Andrew Ward at Swarthmore College, still teaches there, fantastic guy, said possibly one of the most life-changing things to me, which is the field agrees with this interpretation, right? The field agrees with this interpretation, but this is science. And so there is an orderly way for you to respond, which is by running your own test, right, and demonstrating, creating evidence or uncovering evidence that suggests an alternative explanation. And if you want to come to my lab and do that, you're welcome to, and I would support you in that, right? That's what. Can you imagine that attitude inside of FinServ? Instead of the youngest, brightest, most ambitious, engaged people that we have, instead of saying, no, we've tried that and it's not possible, we said, let's find out, right? And I think what you would discover is, we often associate innovation with the young, and the jean-wearing, blazer-wearing guy with there's a look to it, right? A Silicon Valley look we associate with. I would bet that if you unlocked yes and you said, hey, there's a scientific way we can engage in this, you would find some of your oldest, some of the people that you would least predict would be, in air quotes, innovative, actually have tons of desire and pent up sort of, energy and curiosity that's just been waiting for an outlet. And your job as a leader is to create an orderly way to do that. And that's what behavioral science does. It's teaching a skill set that lets the janitor, the line level banker, be curious and really do something with that curiosity instead of just have to sit with it all the time. Because, you sit with it, it just spoils, it curdles. right? Curiosity is meant to be explored. And what behavioral science does is create a structured opportunity for that exploration.
Perfect. Matt, this has been mind-blowing. Love it. Where can people find you?
I'm really easy to find, so they can find me at Frog, right? We do lots of work with folks in the financial services industry. And again, for us, it's, we love these sort of, engagements that allow us to bring our partners along on that journey so that we can always be pushing forward together. I will, you send me an email, I will give a lunchtime talk to your team on behavioral science. No problem. Very happy to do it. And you can find me on Twitter. It's just my name. I'm Matt at mattwallaert.com. I have open office hours, right? I try and lower those inhibiting pressures to getting to me to make it really easy because, the world of missionaries and mercenaries, I'm a missionary about behavioral science. I truly and genuinely believe that if everyone centralizes behavior in their work and then pursues the change of behavior through science, that we can create a much better and more optimal world than we have today. A world in which women are paid fairly, right? And their bank has a vested interest in that. A world in which the unbanked aren't viewed as lazy, right? But rather seen as people whose inhibiting pressures need to be reduced, right? A place where, undocumented workers and other kinds of Americans have every opportunity. Like, those are the outcomes that we want, and those are the things that science can drive because it inherently helps us reduce those biases. So, if you're on board with that, come find me and I will fight with you. And if you're not on board with that, if you think that your business model is predicated on maintaining the status quo, which I think there are banks who are invested in the status quo, then you should know that there are those of us like me who are out there. And, we're better at this than you are, and we will eventually win. It might take a long time. It might take a lot of energy. But remember, I said all behaviors are on the table for change. And I think, the curve of humans bends up and to the right, and we know this. And so I think it is simultaneously a message of hope for a particular kind of bank and a warning to another kind of bank that if you continue to believe that you can maintain superiority through a status quo model, I'm here to tell you that's not going to happen.
Stay curious, change behavior, change the world. Are you ready to go grab coffee in our orange Teslas?
Yeah, let's do it. I mean, I need pants that go along with it, though.
Yeah. Thank you so much again, Matt. Great having you.
That's it for this week. If you like the show, make sure to give us a 5-star rating on your favorite podcast platform, or share it with a friend, or share it on social media.
We'll see you again next week with more Breaking Banks.